So for this video I'll be talking about a soft Brexit. Now by a soft Brexit I mean keeping the current relationship between the UK and the EU as close as possible going forward, and I think that could be seen as pound positive. Well, that's certainly the way the markets have been reacting to soft Brexit news in recent weeks. Now if we go all the way back to June 2016, you can see when we had the Brexit vote here we got the large decline of around 12%, 1800 pips on the day, and the market continued lower. Now I think this large decline was in part due to a shock at the outcome of the referendum, but it was also due to an implicit assumption that there would be a fairly hard Brexit and quite a big change in the trading relationship between the UK and the EU. Therefore, if we do not see that big a change and going forward it is actually more close to what it currently resembles, the trading relationship that is, then we could see quite a strong move higher in the pound. If we take Fib retracements from these highs here around 150 to the lows seen in January of 2017 around 120, you can see that the strong recovery we had last year in the start of 2018 saw the 78.6% Fib around 143.63 tagged, but we had fallen lower in recent months on the back of, in part, fears due to there being a hard Brexit or no deal reached between the UK and the EU. In the last couple of weeks we have seen a bit of a recovery and we currently sit between the 23.6 and the 38.2% fibs, but if we do get a positive outcome for the pound then we could easily see a move back to the upside here up through the 130s, possibly getting back up as high as these 140 sort of levels. Now another cross which has been interesting to follow throughout all this is the pound New Zealand dollar. The pound New Zealand dollar actually had declined quite a bit from its 2016 peak of 2.20 ahead of the Brexit vote. You can see we got a strong move to the downside there, and for several weeks afterwards, these are weekly candles now, there was more declines. The market managed to carve out a sort of base, and after it got back above 188.70 on a weekly closing basis towards the third quarter of last year, you can see it then embarked on another period of consolidation. We've been in a very narrow range for the last 10-11 months really, between 188.70 and 196.40. You can see just in the past couple of weeks we've had some positive news coming out surrounding a possible soft Brexit, and this has boosted the pound. We've seen a pushback above here and we could be on course for three nice bullish green candles to the upside with higher highs, higher lows and also higher closes should this week close in the green. Now, the euro pound is an interesting cross to look at when we're talking about Brexit because it obviously impacts both parties. From the market's point of view at least, what this has shown is that Brexit has been more negative for the pound than for the euro. You can see we have this strong move higher on the Brexit vote, which is obviously weakness in the pound, made the high around 0.93. And since then we've consolidated a lot. Again, the past year there's not really been a lot going on in this pair, and the market's been range bound between 0.9060 or so and a low around 0.8643, which is a 38.2 fib of this entire advance. Now recently we got a bearish engulfing candlestick on the weekly, and we could be set here for three negative candles in a row, the opposite of what we're seeing in the pound New Zealand dollar, and what this is showing is the pound again looking to rise. If we do get more good news and a soft Brexit is announced, then we could see further downside in this pair with a 38.2, a possible first target at 0.8644, and we could even get large moves down towards the 61.8 area around 0.82, 0.83, and potentially even further if we do get a real push to the upside in the pound. Turning our attention to indices, just want to talk here about the UK 100. You can see on the Brexit vote itself back in 2016 there was a swift gap lower and below the 200 SMA, which is this yellow line. You can see this was quickly recovered due really to the large part of the UK 100 revenues being generated in non-sterling terms. Think of the oil majors and large mining companies for instance. You can see as if we just overlay a pound US dollar chart and you invert the axes, it's an inverse relationship. You can see for several months following this there's a very strong inverse correlation between the pound US dollar and the UK 100. This is shown by the pound US dollar falling with these blue and transparent candles, and the UK 100 cash rising as shown by the green and red candles. Now coming back to 200 SMA, you can see for the vast majority of the time since the vote the market was above the 200 SMA, but we have fallen back down below it in recent weeks, in part due to some of the strength that we've seen in sterling. Now if we do get a strong push higher in the pound on the back of soft Brexit outcome potentially, then there could be more weakness to be had here, and you could see moves really even all the way down to these lows that we saw back in March time around 6,847. You can see we had a broad period of consolidation really, but after the market took out this level here, around 7.4, let's say 7.480, there was a bit of a push to the downside, and this also coincides with where the 200-day SMA is at present. Another thing to notice just from a long-term trend perspective is that angle of the SMA. You can see the 200 SMA here was pointing higher, indicative of an uptrend throughout all this push, but it has really leveled off in the past year or so, and it could even potentially be starting to turn lower in recent trades. So if we do get more downside here, then there could be a fairly swift swoon down to these lows below 7,000. Okay, thanks for listening, and best of luck if you're trading these markets in the coming weeks and months.